Welcome to the 1515, brought to you by the regulatory legal experts at the Maples Group. Here, you will learn more about the latest developments in the regulatory laws of the Cayman Islands on the 15th day of every month.
Hello and welcome everyone to our latest edition of the Regulatory 1515 podcast. My name is Chris Capewell. I'm the global head of the regulatory team here at the Maples Group. Joining me today is Patrick Head, a fellow partner in the Cayman Regulatory Group, Michelle Bailey, who's a senior vice president at Maples Fund Services, and Jen Parsons, a professional support lawyer, also in our regulatory team here in Cayman. This is the November edition of the 1515. We've missed a couple of months, so we've got plenty of content today to get on with. I think our last edition was probably in August, of this year. So there's a fair bit to get stuck into. As always, please do note that the contents of this podcast do not constitute legal advice and are a general update only. And then just a few other helpful notes before we get started. If you are listening from your usual podcast app, you'll find any resource documents and speaker information in the description. Alternatively, if you've clicked on the media link sent to you via email, you can find that information in the notes section. And as always, please don't forget to subscribe to us on Apple Podcasts or Spotify. Okay, to get this one started, Pat, I know that we've been incredibly busy in the team at the moment with DITC notices and breach penalties that have been issued to clients. And then you and I also went to the recent town hall last week. So do you want to spend 5 minutes or so updating the audience on DITC?
Yeah, thanks, Chris. It has been a super busy period, I think, both for us, our clients, and the DITC. What we've seen this year for the very first time is the DITC reach out with a breach notice with respect to the CRS regime for entities that have failed to file both their July CRS return information and then also their CRS compliance form, which is due in mid-September. As I mentioned, this is the first year that the DITC has followed up in very quick order, sort of 1 month after that CRS compliance form was due, to notify clients, and where they haven't been able to reach the client directly through the PPOC email address on file, they've sent these letters via the registered office service provider, who will have hopefully passed those on to the relevant client entities, advising them of their technical breach, which is the missed filing deadlines, and providing until early next year to remediate the filings. Now, the notice also sets out the proposed penalties in this regard. It's a combination of 10,000 CI dollars for each offence. So you're talking roughly 25,000 US dollars in total for entities if they don't remediate. What we have been assisting clients with is, one, investigating whether or not the entity has been correctly classified as a financial institution with the authority. In a number of instances, there is actually an error in classification, which may be why the vehicle hasn't submitted the filing. And then either assisting the client with trying to correct its classification and or then deregister with the authority, or to help with remediating by making the required filings where the vehicle is in fact an FI and has simply missed the filings. I think in either event, once the entity's decided on the appropriate classification and what its next steps would be, it should communicate that, whether through ourselves, we're obviously very, very happy to assist, or directly through the PPOC to the enforcement team at the DITC, so that they are aware in a timely manner of the remedial steps to be taken. We would hope that the DITC will not follow through with penalty notices and actually impose the proposed penalties if the remediation's been taken in a timely manner. So I think for anybody out there who has received one of these letters, that really is the key. Step on it quickly, understand the remedial steps taken, make sure the vehicle's been classified correctly, and then communicate with either ourselves or directly with the DITC what you're proposing to do. We've also seen, on top of that, the DITC issue a number of both penalty notices with respect to the economic substance regime, as well as compliance notices. But again, the penalty notices there tend to be for a failure to have filed the economic substance return within the relevant 12-month period. So again, I know this is a point that Michelle is going to touch on a little bit later in this podcast. But for clients, we're currently now mid-November. We're running out of time for those that have a 31 December deadline. If you haven't completed your economic substance filing with respect to the 2023 period, you should be doing so very shortly. As I said, we're very happy to help clients who have received a penalty notice with respect to 2022. Again, we can go back and make sure that you've been classified correctly and then assist with filing the updated or remediated return if needed. And you're right, Chris, we were at the roundtable or town hall meeting just recently with the DITC, which is quite an informative session. And what was quite interesting, I sort of took the main point out of that was that the authority is certainly looking to demonstrate to its own oversight panel, which would be the global inspections teams, that it is enforcing the regimes, both CRS in particular in Cayman, and that I think is what has given impetus to a lot of these compliance letters and breach notices. As part of that sort of demonstration of enforcement of the regime in Cayman, the authority is talking about commencing desktop audits. So similar to audits that CIMA currently undertake of regulated persons, the DITC is looking at undertaking these desktop audits. That could be either a live in-person meeting if the client's based in Cayman, or it will be over Zoom meeting. But again, sort of a detailed review of an entity's compliance program with respect to the CRS. Do you have the appropriate policies and procedures in place? Are you collecting the right forms? Who's actually reviewing the forms and documentation? What are the processes in place for making sure that filings are completed both accurately and on time? So that again will be, I think, a new thing, which I think from timing probably is not going to happen until maybe next year. There's obviously a lot going on in the jurisdiction at the moment, but I think people need to be mindful that that is coming. And to the extent that you're handling CRS or ES filings processes in-house, and if you're aware that those processes aren't quite as efficient as what they should be, then again, please do reach out to us or to colleagues at Maples FS. We're very, very happy to assist to make sure that you don't fall afoul of the DITC and its enhanced measures.
Yeah, the point that you mentioned there is actually consistent to what we used to talk about when we were on the FATF grey list with the technical compliance and the effectiveness. So in the town hall meeting, the DITC were stressing that, technically on the CRS side, the jurisdiction has been assessed as doing very, very well. But now there's a need to really show effectiveness to those laws, which is resulting in the increased penalties that we've been talking about. The other point for us is that when we did go to that town hall meeting, it's a fairly packed room. So I think a lot of clients are navigating through similar issues. Just giving an update on beneficial ownership. As a reminder, beneficial ownership applies to every form of entity in the Cayman Islands other than currently trusts, but there may be a separate regime coming in that will sweep up trusts. In September, the Ministry of Financial Services did release its new beneficial ownership enforcement and appeal procedures manual. We do recommend that you give that a quick read. And then the month after September, we did have some industry consultations around beneficial ownership, legitimate interest, access regulations, and also access restriction regulations. Those consultations were primarily focused at the mechanics under which a form of register may become public and what may be contained in that public register and who may have access to that register and the procedure by which they try to obtain access. Those consultations, I think a good number of people fed into them, and they closed on 25th of October. So that has now closed, and we're anticipating that there will be some form of regulations passed by the end of this calendar year. So I think we'll probably do another podcast when those come out, because there will be important regulations. As I mentioned at the start, this does impact pretty much every entity in the Cayman Islands. So you're probably receiving emails and hopefully replying to those emails from your registered office provider and your legal counsel. If you do have a Cayman Islands entity and you're yet to hear from either your attorneys or your registered office provider, then we suggest that you connect with them as quickly as possible and obviously reach out to us if you need any help. But beneficial ownership should be a priority for everybody who's listening to this podcast. Jen, if I can bring you in now, we've touched on BOTA, we've touched on the DITC. Has there been any further updates from CIMA itself?
Yeah, thanks, Chris. A couple of things to note. There are a couple of publications that I'll talk about, but just more than anything, a bit of a milestone that as of the 4th of September of this year, the total number of registered investment funds in the Cayman Islands is now over 30,000, 30,038 to be precise. 17,080 of those are private funds and 12,958 of them are mutual funds. And there's further growth still projected for the balance of the year. I mean, that is quite a significant milestone for the jurisdiction. And I think one worth pointing out. It just reinforces the reputation, I think, of the jurisdiction and the fact that it is best in class. Moving on then to CIMA's publications that were released recently. In October, we had an updated version of CIMA's regulatory handbook. Broadly, that handbook, of course, governs the practices of how CIMA goes about enforcing and carrying out, its responsibilities. But specifically, the updates that were included this time to direct folks to would be there is additional commentary now on CIMA's authorization process. So that would be including how they assess fitness and propriety, taking a close look at that. There's also additional commentary on the termination and cancellation of registrations and licenses. So again, another area to make sure you're always referring to the latest guidance available. There's additional guidance on change of name requirements because for regulated entities, it's more than just making filings with the registry here. It also means looking at what CIMA's requirements are. There's also new guidance on approved actuaries. So that's, of course, in the insurance space. We've got some clarity on the effect of CIMA's letters of good standing, as well as updated guidance on CIMA's approach to inspections and on the risk-based approach to AML, CFT, CPF, CTFS oversight. As well, finally, there are updated appendices that deal with the divisional responsibilities for various applications and filings to CIMA. The other publication that we had is a supervisory circular on complaints handling and regulatory expectations. So specifically, this is CIMA providing guidance on how regulated entities should implement and embed effective complaints handling procedures within their organizations. CIMA wants to encourage regulated entities, in particular, to review the rule and statement of guidance on internal controls, in particular, Sections 1211 and 1212, and the rule on corporate governance for regulated entities. And in particular there, it's going to be Section 5.75. Just to go over what each of those sections refers to specifically. The internal controls, Section 1211, that will deal with the fact that regulated entities have to have adequate procedures in place for receiving, recording, investigating, monitoring, and resolving complaints. And then in 1212, it's basically CIMA saying, take these complaints seriously and reinforcement of that particular position. Then in Section 5.75 of the Rule on Corporate Governance, that is a section that talks about each individual director of the governing body of an entity and needing to ensure that any issues and complaints are addressed appropriately and in a timely manner. So it is important to, look carefully at those particular sections to make sure that any policies and procedures that are in place now comply with those particular mandates. We do know that CIMA will be assessing compliance and during any future on-site inspections with these particular rules. And any regulated entity that has not already ensured their compliance with the new regulatory measures that we've mentioned, specifically the rule and statement of guidance on internal controls for regulated entities and the rule on corporate governance for regulated entities, should be sure to do so urgently. And Maples, as always, is pleased to assist in this regard and helping any regulated entities ensure that their policies and procedures do comply.
Perfect. Thanks, Jen. Whilst you're on the subject of regulators, are you able to have a chat just around FATF and their revised criteria for listing and delisting of countries?
Yes, absolutely. So we didn't watch, I guess, quite as closely as we have in years gone by, the latest developments in terms of the FATF plenary. The most recent one was held in Paris the 21st to the 25th of October, because, of course, this time around, fortunately, we're not looking at it with the same kind of concern around whether the Cayman Islands is subject to gray listing or not. But we do still remain engaged with that at all times because the plenary does deal with matters that are of direct relevance to the Cayman Islands. And as you said, Chris, that would include listing and delisting of countries. beneficial ownership, which you'd also mentioned, and virtual asset standards, as well as just general jurisdictional updates on the next round of mutual evaluations that will happen. Another interesting thing that we were certainly watching and pleased with this time is that for the first time, 2 jurisdictions were invited to participate in the FATF plenary and working group as guests. One of those was the Cayman Islands. The other was Senegal. We're, of course, obviously delighted that the Cayman Islands was given this particular honor to be invited to participate. I think it just demonstrates the significant progress that the FATF has made in terms of making it a priority to increase its inclusivity and to broaden the diversity of perspectives that are represented during the plenary meetings that are held. You had also mentioned, and it's worth noting that, coming out of this process, I guess leading into the plenary and then coming out of the plenary, something that's happened is that the FATF has reformulated its criteria for listing and delisting of countries. And we certainly hope that that will assist in the future to better target the countries that truly do pose the greatest risk to the international financial system. So the idea here is to ensure that this is not kind of an overbroad or overreach situation where countries are being targeted when the countries are quite small or they have limited involvement like that in terms of international finance. We do think that's a step in the right direction, that there are new criteria that will be coming into play that should tighten up the system and the criteria going forward.
Yeah, I think that combined with, as you mentioned, the invitation to participate in the plenaries is only a good thing for Cayman. That's a tremendous achievement by the government and behind the scenes, a lot of industries. Well done to all those in Cayman that are listening. Michelle, we might pivot to you if we can, please. You're special guest from Maples FS. Michelle is more involved on the practical side of a lot of the items that we're talking about. Economic substance is an area that you did want to talk about. So I'm able to hand over to you for a few minutes, please, Michelle.
Sure. Thanks very much, Chris. Thanks for having me on this month's session. First of all, I just wanted to add an additional comment in relation to the CRS breach notices that Pat mentioned a little bit earlier, because there could be in relation to merely a timing matter as well. We are seeing some entities that were registered prior to the 30th of April this year, but not actually incorporated or commenced business in 2023, that are also receiving breach notices in relation to non-filing of CRS returns for 2023. Where they are actually not required to report for 2023, then the PPOC can simply respond to the DITC accordingly. In relation to economic substance, as Pat mentioned, we have the upcoming economic substance return filing deadline for those relevant entities with relevant activities that have a 31 December fiscal year end. And the deadline for submitting those returns in relation to the 2023 ESN year is 31 December 2024. Now that's fast approaching, so if you haven't done your filings already, then please get on to that. There is only about 6 weeks left, and as you get closer to that deadline, the portal is much slower, so recommend to do them as soon as possible. In relation to economic substance notifications, they're also coming up. You'll get notifications from your Cayman Council or your registered office, whereby your entities have to confirm whether or not they are a relevant entity carrying out any relevant activities. And this year there is additional information that's required in relation to both the start and the end dates of the fiscal year. It's really important that these are highlighted to your registered office if your fiscal year end is not the standard 31 December, or if you've had a partial year, either starting or ending those activities on a date other than the standard fiscal year. Additionally, it's important to ensure that the classification is accurate, and that's what Pat mentioned earlier as well. TCR being very active in reviewing what's being filed in the ES returns, as well as reviewing the actual financial statements that are being submitted, and they're paying particular attention to whether the classification seems reasonable based on what information is being submitted. If, in fact, you have indicated earlier on in the year a certain relevant activity, but it actually changes throughout the year, then you can actually change that relevant activity via the ESN. You can have your registered office file an updated ESN with the updated activity. That can be done up to 12 months after the filing of that ESN. If you miss that deadline and it's after that date, you cannot do it that way. The only way you can actually change the relevant activity is by filing the actual ES return and indicating a change of activity. And now what is required when you do that is that you have to include a detailed explanation for the reason for the change in the relevant activity, as well as provide supporting documentation to substantiate it. Other points to be aware of include if you have a change of director and need to change the responsible person, or if you need to update their email address. Again, this can only be done through the registered office. The account must be activated by that responsible person in order to submit any economic substance return filings or to appoint a secondary user. If a secondary user was previously appointed under the prior responsible person, then that does not need to be changed or redone again. They will remain a secondary user once that change goes through. Secondly, when submitting the economic substance returns, all relevant entities other than holding companies are now required to answer questions relating to governance, even if there's no relevant income to report in a particular period. In the past, if there wasn't any relevant income, then you could skip those questions. They didn't actually come up as mandatory. This year they will be. In relation to other income to be submitted in the ES return, generally information relating to structure, including the parent and intermediary companies, is required. However, underlying beneficial ownership information or UBO information is not required and was not mandatory unless the entity is actually conducting intellectual property business or has answered any of the confirmations or declarations in a negative way. Additionally, there is a question in relation to confirming whether the entity is part of an M&E group for CBCR purposes or country by country reporting purposes. And the reason they're asking that is because this question needs to be considered under the country by country reporting regulations. It is applicable where there are two or more enterprises in the group for which tax residence is in different jurisdictions, or the entities are subject to tax in two or more jurisdictions because of business being carried out through a permanent establishment in another jurisdiction. Not only that, it's only applicable where the group is required to prepare consolidated accounts and the consolidated group revenue is over $850 million in the past fiscal year. That should be considered on an annual basis. And if the answer to that question is yes, then the name of the M&E group is required to be entered in the return as well. And I'm sure the DITC will be checking to see that the entity is registered under the CBCR regulations as well. Finally, as Pat mentioned earlier, we're seeing the DITC being a lot more active in sending out communications. They're sending out reminders, and sometimes those reminders and returns in relation to economic substance returns are actually after they've been filed, so they're very much automated. So if you receive a reminder and you have actually filed, then you can ignore that. But they're also sending out compliance notices as well as penalty notices with substantial penalties for non-compliance, again, as Pat already mentioned. And we're also seeing them starting to ask questions in relation to what's being actually submitted. Just to reinforce, it's really important to ensure ongoing compliance, and if you're having any challenges with that, we can certainly assist. On that note, I will pass you back over to Chris.
Thanks very much, Michelle. Very insightful. Just before we close, some important year-end reminders given where we are now. We're sort of middle of November now. Year-end is fast approaching. As we've said on the podcast, I think both Michelle and Pat touched upon this, economic substance. Please ensure that your economic substance return filing deadlines with December fiscal year ends are all attended to. Also, economic substance notifications, you need to be aware of those. I touched on beneficial ownership. Very important that you're on top of beneficial ownership before the end of the year and as soon as possible. So I would encourage you again to reach out to your service providers. Finally, if you do have entities that are terminating this year, just to be mindful of those regulatory obligations that may still attach. AOI, so FATCA CRS, you'll obviously need to ensure that your filings are up to date and you deactivate from the DITC portal. For AML, you need to ensure that you're all up to date with customer due diligence so that any distributions, final distributions can be made and the entity can be terminated. Again, economic substance, you'll need to satisfy all of the relevant obligations, including the EES test up until wind up or dissolution. And then finally, if you do have CIMA regulated entities, including, of course, our mutual funds and our private funds, you will need to comply with the CIMA deregistration obligations that you should already be aware of. All right. Thank you to each of Pat, Jen, and Michelle. Very much appreciate your time on this. And for the listeners, thank you for taking the time to listen. And we will catch you on the next webcast. Thank you.